Hi there, I'm Erin Nutting, owner of Integrity Insurance Services here in Arizona. And what we've put together for you today is a module on understanding homeowners insurance, but it is specifically based for lenders and mortgage processors. So we're hoping to add a little bit more value to our already existing relationship, as well as adding more value for your client experience. So we're just going to dive right in since we have quite a bit of content to cover. All right. So why are we here? We're here to familiarize lenders with homeowners and property insurance, as well as help lenders to become a more valuable asset to their borrowers and clients, and share how Integrity Insurance Services can be a valuable partner to lenders, as well as their borrowers and clients. All right. So the homeowners insurance policy is based off of 6 basic parts. We're going to start with coverage A all the way through coverage F, and we're going to go ahead and we are going to dive into each one of these basic parts in depth, but this is a good outline as to what you should expect in any basic homeowners insurance policy. So basically where it starts is the oh my gosh moment. How would your client rebuild if something ever were to happen? And this is going to really be covered under your coverage A, your dwelling. This coverage provides for the main structure on the property and any attached structures. For example, if you have an attached garage. This is based off of replacement cost estimate, not market value. Coverage is subject to a deductible. Dwelling amount is also used to calculate other limits on the policy. Replacement cost versus listing price. This is probably single-handedly the most often question I get when working with lenders, customers, even real estate agents. Replacement cost is the amount it would cost to rebuild, replace the home and structures based on the current local price of labor, raw materials, and including demolition, debris removal, building permits, and so much more. Insurance coverage is always based off of replacement cost. Listing price and market value. The amount for which something can be sold in any given market is going to be your listing price. Your market value is, your insurance coverage is not based on the market value since it includes the price of the land, which of course is not insurable. Coverage B is going to be your other structures. If you kind of veer your eyes down to the bottom of the screen there, it's going to show you a couple of examples like a garage, shed, pool. It is not limited to this, but this is just a few great examples of things that can be considered other structures. This coverage provides for the detached structures on the property. Coverage starts at 10% of the coverage A dwelling. It is subject to a deductible, and the limit may be increased to accommodate number and size of buildings. Coverage C is your personal property. As I like to always make sure I tell my clients, a good way to look at it is if you take your home and flip it upside down, everything that were to fall out could be considered your personal contents. Or of course, if you would move it with you, if you transported, if you moved from one home to another, that would also be considered your personal contents. This coverage is for your personal belongings that are damaged due to a covered loss. Coverage starts at 50% of the dwelling and of course can be increased. Contains internal limits for items such as jewelry, arts, computers, etc. Coverage D is going to be your loss of use. In the event this coverage would specifically cover you for additional living expenses from being displaced from your home due to a covered loss. Coverage starts at 20% of the dwelling. It can be increased on some policies, and it carries no deductible. So any incurred expenses that would put your client out of their home due to a covered loss would be something that would be covered under loss of use. Coverage E is going to be your liability. Coverage for defense and settlement if you are sued or if you are found negligent for injuries or property damage. A great example of this is if your dog bites someone. Coverage begins at $100,000 and can be increased up to $1 million, and my agency recommends at least $300,000. Liability carries, of course, no deductible. Kind of a bonus to this, as I always like to go over with my clients, is an umbrella insurance policy. This is a liability policy that provides additional limits in increments of $1 million, and it has a very significant minimal price. Another bonus item to this is that it's not just going to extend over your homeowner's liability. It can also cover things like auto insurance, watercraft, any kind of landlord or rental properties that your client might have. These are all things that can be encompassed in an umbrella policy. So again, just kind of a neat little bonus item to know if your client's looking for something like this, your independent insurance agent can normally accommodate them. All right, coverage F is going to be your medical payments. This is coverage for medical bills of those injured on your location regardless of legal liability. This is what we like to refer to in my industry as the goodwill coverage. This helps prevent the lawsuit or the use of liability in coverage E. Limits usually start at 1,000 and go all the way up to 5,000. However, depending on your state is depending on what kind of limits are available for this. So you just want to make sure that you keep in mind to talk with your independent insurance agent. Medical payments carry no deductible. So some common insurance terms that you as a loan officer, lender, mortgage processor have probably heard by now at least 100 times is replacement cost versus actual cash value on a property. Replacement cost is the actual cost to replace an item or structure at its pre-loss condition versus actual cash value, which is computed by subtracting your depreciation from the replacement cost. Some examples of an actual cash value that we see frequently here in Arizona are going to be things like manufactured homes. On the other side here of our screen is open perils versus a named perils. Open perils insures against loss to cover property from all causes except those that are specifically excluded. A named peril policy is going to insure against loss to covered property from only those causes that are specifically named on the policy. So the kind of types of insurance policies that I'm sure you're familiar with as a lender that I wanted to go over today is really the basic forms, which is going to be your basic homeowner, your renters, your more comprehensive homeowners insurance policy, your condominium, your vacant builder's risk, and a landlord policy. So your homeowners, or otherwise in my world called an HO-3, this is going to be your most common homeowners insurance policy and probably the most that we actually will discuss. Your dwelling is going to have an open perils. It's also going to give you replacement cost. Your personal property is going to be a named peril, as well as replacement cost on your contents is available. This is, however, not always included. So you just want to make sure when you're working with an independent insurance agent or you're advising your client on who to use as an independent insurance agent, that they're having the conversation with them and educating them on why a reason would be that your replacement cost for your contents should be on the policy. Okay, so your homeowner's HO-5 policy is going to be your more comprehensive coverage for your homeowner's policy. As you can see, this is a little different than the prior slide. Your dwelling is going to be an open perils. You're going to have replacement cost on your dwelling. Your personal property is also going to be open perils, and you have replacement cost automatically included. You have higher internal limits on your items such as jewelry, computers, and etc., firearms, fine arts, things like that. A renter's policy, an HO-4 policy, which I always advise as an independent insurance agent, if you have a client who is purchasing a rental or an investment property and they will be renting it out, this is something that we can do as well for them to make sure that their renters have coverage. Their renters can actually reach out to our agency, or we can do vice versa and make sure that this coverage is in place for them as well. A renter's HO-4 policy is going to be a personal property policy. This is a named peril policy, and replacement cost is also available for their contents. However, it's not always included. So again, same like the original HO-3 policy, we want to make sure that you're working with an agent who can educate your client and see what policy works best for them. A homeowner's HO-6 policy, which is also known as a condominium policy, covers for the walls in. So it's a named perils policy. There is open perils available. So you just want to, again, check with your agent. Personal property would be covered for named perils. You would have a loss assessment coverage, which just is different than any of the other forms, in that this provides your coverage for losses assessed to each unit owner by the association. It is available, depending on what state you're in, up to $50,000. So what does walls in mean? Well, that basically means like your flooring, your cabinets, built-in appliances, bathroom fixtures, and basically anything that's permanent from the studs in. Just a side note on that HO-6 policy, we realize as independent insurance agents that there are going to be some different classifications for your loan that you might need on this type of policy, since the dwelling is typically lower. So you just want to make sure if you have any kind of special questions or any kind of special needs on the loan documentation that you just let your independent insurance agent know, and we can make sure we get you accommodated. A dwelling fire DP1 policy is a vacant builder's risk. It is available for structures that are vacant due to being on the market, under construction or renovation, and between tenants. This coverage includes actual cash valuation on the structure, fire, vandalism, and malicious mischief as covered perils. Theft of building materials can also be endorsed onto the policy. Liability can be included for injuries and damages while the property is vacant. Just a side note on this, you want to make sure that when you're working with your vacant homeowner's insurance policy that you do have vandalism and malicious mischief, as most times that does need to be endorsed onto the policy. A dwelling fire DP3 landlord policy is going to be available for structures that are non-owner occupied. So these are for the tenant occupied and or vacation or seasonal rentals. Additional protection for a DP3 also looks like having loss of use coverage for any kind of lost rental income and landlord liability for claims arising out of tenant exposure. So your clients that are purchasing their brand new home and considering keeping their old one, this would be the policy they would need. Did you know that in a standard homeowners insurance form, earthquake coverage is not a covered loss? It is not covered in your homeowners, condo, renters, or business policy. So what would you do if you went ahead and needed an earthquake policy? We would go ahead and accommodate you by writing a separate earthquake insurance policy for you, and it would cover things like coverage A and B, which is dwelling and other structures, coverage C for personal property, coverage D for loss of use, building code upgrades, and then of course loss assessments, which would be available for condo owner policy only. So has your home or place of business been retrofitted? These are things that as loan officers, I'm sure that you go up against all the time, and making sure that we can accommodate, or you're working with an independent insurance agent who knows what the state of the building is in. These are just a couple of examples of retrofitting and new construction. Flood insurance is also not a covered loss on a standard homeowners insurance policy. Sometimes, however, as you know, it is required by mortgage companies, depending on the flood zone of the property. It is provided by the NFIP and sold through private carriers such as Integrity Insurance Services can accommodate you through multiple companies. Everyone in the country is essentially in a flood zone. It's just a matter of what flood zone you're in that will determine as to whether or not you actually need flood insurance coverage. So how do you get the lowest possible escrow number for your borrowers? This is the meat and potatoes of the module. One, you want to work only with an independent agent like Integrity Insurance Services, who can compare your borrower's coverage and pricing with multiple companies to ensure that your borrower gets the best possible pricing and coverage. Two, quote accuracy is crucial, in particular with the coverage A dwelling limit, which is a large part of the premium is based on. We'll make sure that the limit is accurate as possible by completing a detailed replacement cost analysis. Three, you want to utilize the extended replacement cost limit, which provides additional limit of coverage over and above the base coverage of coverage A dwelling limit. So we want to make sure that we're quoting accurately, we're giving you a good dwelling coverage, but if we need to get more coverage for you, we need to make sure that you're working with an agent who can take into consideration the extended replacement cost. You want to four, maintain a sensible deductible to keep the insurance premium in check. You want to try starting out at $1,000 and going up from there to see how it impacts the premium. This can help your borrower as well. We are sensitive to the fact that some loans require certain deductibles and require a cap of a deductible. So you just want to make sure that you review that with your agent as well. Five, make sure the borrower is getting every possible discount there is. Discounts are available for association memberships, organizational discounts, as well as security system and gated community discounts. Number six, you want to prepare the borrower to communicate with the agent directly. This is the best thing that you can do for your client, so they don't assume that you're the agent or the point of service for future questions or issues. Of course, making sure we're taking more things off your plate, so that way you don't have to worry about it in the future. So of course, if you ever have any questions, you can always reach out to myself or any of my team at Integrity Insurance Services. But our end game is to make sure that we, at the end of the day, are helping you close more loans. So you can always have your clients call our office at 520-488-2495. You can always look us up on the internet at integrityinsure.com. And then of course, our email is listed here in this last slide. Thank you so much. And we look forward to doing business together and providing your clients more value. Thanks so much.